ever desire to fast track the growth of your investment portfolio to the point where you can retire early, travel around the world anytime you choose, and live financially independent for the rest of your life? Or are you wondering how billionaires like Warren Buffett have grown their portfolio over the years into what they have today? Well, I've provided a breakdown of these things in my previous video, which I've tagged right here. So if you missed that video, please go back to watch it before watching this one, as this video is a sequel. So in this video, I'm going to be talking about the top 8 undervalued stock which you should consider buying today. So I actually love these companies and their stocks because they have built reputation over the years, and these stocks have amazing potentials to blow up or to skyrocket in the coming years. So if you don't want to miss any of these gems, ensure to watch till the end and tell me what you think about the stocks. So here are my top 8 undervalued stock which you should consider buying today in no particular order. So first on my list is JP Morgan with the ticker symbol JPM. So JP Morgan is regarded as the largest bank in the United States with assets worth $3.9 trillion, and is also regarded as the world's largest bank by capitalization as of 2023. It operates through 4 major segments. First is consumer banking, investment banking number 2, number 3 commercial banking, and the last is wealth management. So I think that JP Morgan has a very great potential for continuous growth because it has continuously invested. For instance, this year alone, JP Morgan bought a 40% stake in a Brazilian digital bank, and in May of this same year, JP Morgan acquired First Republic Bank after it failed and was seized by FDIC. Now, FDIC stands for Federal Deposit Insurance Corporation. Now, let's take a look at what Yahoo Finance has to say about the stats of this company. Now, as you can see that this is currently trading at 145.01 right now based on the statistics. You can also see that the market capitalization sits at a comfortable 421 billion USD, which my mouse is right hovering here. And of course, the PE ratio, which is 9.3 for the trailing, and the forward ratio is 9.81, which shows that the company has more potentials for growth in terms of its valuation. Okay, now you can also see a 2.97 for its PEG ratio, which I explained earlier. Now, when you compare the 145.01 at the top here to its 52-week high, which is 159.38, it also shows that the potential to grow in stock price is still very much there. If you take a step further to look at profitability of this business, you can see it has a profit margin of 35.38% and an operating margin of 41.98%, which of course reflects that the business is highly profitable. And then when you take a step to look at the management effectiveness, it's clear to everyone that the business is managing its assets and equity effectively to generate returns. Of course, you can see that the ROE, which is the returns on equity, sits at a comfortable 15.98%. Although this stock currently trades at about $145, several analysts believe that this stock has the potential to get to about $175 to $180 in terms of its market price. As such, based on this, I'm going to rate this stock a strong buy for me. So number 2 on the value stock to buy today is what I call Berkshire Hathaway. Now, this company trades with the ticker symbol BRK-B. So Berkshire Hathaway is a multinational company that engages in insurance, freight rail, transportation, and utility business worldwide. Since being overseen by Warren Buffett, who is the CEO of this business, the company's book value has grown by an average rate of 20% compared to the average 10% growth of the S&P 500 index with minimal debts. The growth of this business has also impacted its dividend over the years. Now let's take a look into Yahoo Finance to see what the statistics has to say about this stock. So as you can see from my screen, Berkshire Hathaway trades on the New York Stock Exchange at $350.18. So if you take a little scroll down, you can also see that the market capitalization of this business sits at $763 billion, and it has an enterprise value of $839 billion and a trailing PE ratio of 8.84, which means that the business is quite undervalued today. Also, if you move to the right a bit, where my mouse is hovering over, you can see that the 52-week high is 373.3, which when compared to 350.18 shows that the business stock can go even higher. Now, if you look at the profitability of this business, it has a profit margin of 26.02, an operating margin of 33.08, which means it's profitable. And of course, in terms of the management effectiveness, the returns on equity sits at a 17.12% comfortably. Now, I understand that this stock currently trades at $350. However, analysts believe that this stock could actually go as high as $415, which makes me rate this stock a buy. And of course, in addition to other parameters I've talked about. So the third stock on my list is Pfizer Incorporation. Now, Pfizer trades on the New York Stock Exchange with ticker symbol PFE, and it's a pharmaceutical company that develops, manufactures, and sells biopharmaceutical products, which includes medicines and vaccines all over the world. The company currently ranks as 38th on Fortune 500 and 39th on Forbes Global 2000. So at this point, the stock price is currently down by 33%. However, there's a lot of potential for increase because of several factors which I'm going to explain. The first is that Pfizer is set to launch 19 new products within an 18-month span, and these 19 products are estimated to generate about $20 billion by 2030. Number two is that Pfizer proposes to acquire a company called Seagen, which is a global biotechnology company that will significantly help this business improve its profitability over the years. The third reason is that Pfizer has very good profitability and of course amazing cash flow. Now let's take a deep dive into what Yahoo Finance says about Pfizer's stock and its statistics. Now you can see that Pfizer trades at $33.17, has a market capitalization of $187.28 billion and an enterprise value of $207.83 billion. Okay, now when you take a look at the trailing PE ratio, it sits at a comfortable 8.82, which means that the stock is likely undervalued. All right, now let's take a step to the right, and you can see where my mouse is hovering that the 52-week high rate sits at $54.93, which is way higher than the 33.17, which is its current stock price. Also, in terms of profitability, it has a profit margin of 27.55%, an operating margin of 32.53%, which is at least one of the best profit margins out there. So from a management effectiveness perspective, you can comfortably say that management is effectively utilizing its equity and asset to generate returns, which you can see reflected in its ratio of 23.07 and 7.63 for the ROE and ROA respectively. Other than that, at the bottom right, you can see that it has a payout ratio of 43.09% and a forward annual dividend yield of 5.11%. Now, it's understandable that this stock trades at $33 today. However, analysts believe that it has a potential to get to about $45. As such, I'm going to rate this stock a buy for me. Number 4 on my list is the famous Amazon.com. It trades with the ticker symbol AMZN. Now, Amazon is a multinational technology company that focuses on e-commerce, cloud computing, online advertising, digital streaming, and artificial intelligence. Amazon also engages in the retail sale of consumer products and subscription through online stores and of course physical stores across North America and across the world. So this business operates through 3 major segments: North America, International, and Amazon Web Services, otherwise known as AWS. Amazon is also considered to be one of the big 5 American technology companies, alongside the likes of Alphabet, Apple, Meta, and Microsoft. Amazon is also regarded as one of the world's most valuable brands. Now let's take a deep dive into Yahoo Finance to see the statistics of Amazon.com. Now, Amazon currently trades at $127.12 on the Nasdaq market. It has a market capitalization of $1.31 trillion and an enterprise value of $1.39 trillion. Okay, now it has a very high trailing PE ratio, but never mind, we're still getting there. Although it might have a high trailing PE of 100.89, now when you look at the forward PE, which is 40.49, it shows that the company even has more value to achieve. If you take a look at the PEG ratio, it sits at a 2.53, and then when you move on to the right, there's a 52-week high of $145.86, which means that this $127 can still go even beyond that range of its high. Now, when you look at the profitability of the business, you can see that it has a profit margin and operating margin of 2.43 and 3.29% respectively, and of course management effectiveness that sits between 2% to 8%. Now, although this stock currently sits at 127, several analysts believe that it has a potential to still get to about 170 USD. As such, based on my assessment and that of several analysts, I'll rate this stock a strong buy. So number 5 stock on my list is T-Mobile US Incorporation with the ticker symbol TMUS. T-Mobile is one of the top 3 biggest wireless service providers based on market share. As at Q4 2022, it had a subscriber base of over 113 million people. T-Mobile provides mobile communication services across the United States, Puerto Rico, and the United States Virgin Islands. It offers voice, data, and of course messaging service to all its customers. So let me show you what Yahoo Finance says about the statistics of this stock. Now, if you can see my screen, it trades at 140.05 with a market capitalization of 164 billion USD and an enterprise value of 270 billion. Okay, it has a trailing PE ratio of 27.9 and a forward PE of 13.53. And of course, it has a PEG ratio of 0.25, which means that the stock is highly undervalued. So when we take a step to the right, we can see that it has a 52-week high of 154.38, which is significantly higher than its current share price of 140.05, which of course is an indicator that there's still potential for more growth for this stock. All right, let's take a scroll down. We can see that profit margin sits at a comfortable 7.82% and an operating margin of 19%. And of course, management effectiveness has reflected in the returns on asset and equity that ranges from 4 to about 9.05%. And of course, I showed you that this stock trades at $140, but analysts believe that it can get up to $177, which makes this stock a strong buy for me. So number 6 on my list is Chevron Corporation. Now Chevron goes with the ticker symbol CVX. Chevron engages in integrated energy and chemical operations in the United States and over the world. It operates through its 2 major segments, the upstream and the downstream function. So the upstream function is involved in the exploration, development, production, and transportation of crude oil and natural gas, while the downstream segment focuses on refining crude oil into petroleum products, markets crude oil, refines the product, and of course produces lubricants. So if you are wondering what expansionary measures that Chevron has taken in recent times, well, in August 2023, Chevron acquired PDC Energy, which is expected to improve or increase its reserves by over 10%. If we look at Yahoo Finance, we can tell that Chevron trades at 168.62 with a market capitalization of 321 billion and an enterprise value of 333 billion. It has a trailing PE ratio of 10.69, and of course, as expected, it has a 52-week high stock price of 189.68, which is significantly higher than its current price of 168.62. Now, if you take a look at the profitability and management effectiveness, you can see that it sits at a comfortable rate as well. So like I've done for the others, although it sits at a 168 price, many analysts believe that it can get up to $187 in terms of its potentials. And based on this, I'm going to rate this stock a buy for me. So the 7th on my list is what I call General Motors Company with the ticker symbol GM. So GM is an automotive manufacturing company that designs, builds, and sells vehicles and automobile parts and provides software-enabled services and subscriptions worldwide. So GM was the largest automaker in the United States in 2022 by sales, and it was the largest in the world for 77 years until losing its spot to Toyota in 2008. So in terms of its expansionary measures it's taken so far, GM recently announced its collaboration with Google for bringing AI features to its one-star interactive virtual assistant. Now, in terms of Yahoo Finance statistics analysis, you can see that it trades at $32.97 and has a market capitalization of 45.36 billion and of course an enterprise value of 130.78 billion. Now, you can see that it has a trailing PE of 4.6 and a PEG ratio of 4.86. Switching to the right, you can see that it has a 52-week high share price of 43.63, which means that the current share price of 32.9 can of course grow beyond that. Overall, looking at the profitability and management effectiveness, it shows a reasonable range for a company of this size. Now, based on its current stock price of $32, analysts believe that it can still get to about $50 in terms of its growth. Now, as such, I'll still rate this a buy stock. So the last stock on my list is Merck & Co. Inc. with the ticker symbol MRK. Now, Merck ranks as one of the top 5 largest pharmaceutical companies by revenue as of 2023. So Merck basically develops and produces medicines, vaccines, biologic therapies, and animal health products. Now, when you take a look at Yahoo Finance, you can see that it trades at $102.95 and has a market capitalization of $261.2 billion and of course an enterprise value of $291 billion. It has a trading PE of 84.39 and a forward PE of 12.21. And most importantly is the PEG ratio, which is 0.86, which means that the business is quite undervalued. All right. Now, if you go down to the 52-week high of a stock price trend, you can see that it has the potential to get to still $119.65. Now, the profitability shows effective profit margin of 5.34% and an operating margin of $14.87. And of course, the management effectiveness ranges from 5 to 7%. Now, although this stock currently trades at $102, a lot of analysts believe that it can get to as much as $124, which makes me rate this stock a buy stock. Alright, thanks for taking the time to listen to me, and I hope you found this video very insightful and helpful to your financial decision. If you're interested in more of this content, ensure to like this video, share and subscribe to this channel so you don't miss any of my content subsequently. Finally, please remember that information shared on this video and in most of my other financial videos are simply for educational purposes and should not be misconstrued for financial advice. And that's simply because I don't know your personal financial situation to give you the best recommendation that suits your own state. Alright, thanks for taking the time to listen to me and see you at the next video. Bye.